Hello, everybody. Thank you very much for joining today's webinar, Financing Forest and Commodity and Carbon Markets. We'll begin in just a moment, waiting for a few more to join. Thank you.
Okay, well, we're not at capacity, but I think we should start to be respectful of everyone's time who has joined on time. I'm going to start sharing my screen, and let me go into slide. Okay. All right, so once again, welcome to the webinar today, Commitments in Action, Corporate Tells for Financing Forest Conservation and Restoration. The speakers today will be Stephen Donofrio, Director of Forest Trend Ecosystem Marketplace and Supply Chain Initiatives. We'll also be hearing from Philip Rothrock, Senior Associate with Forest Trend Supply Chain Initiative. And we're happy to have Michal Zrust with us here today, founder and CSO of Lestari Capital. My name is Patrick McGuire. I'm the Senior Program Manager here at Forest Trend's Ecosystem Marketplace and Supply Chain. I'm just going to start off real quickly by going over some logistics, especially for those of you who might not be familiar with the webinar software, and then I'll turn it over to Stephen. For today's webinar, we'll have about 30 minutes or so for presentations, and then we'll use the balance of the time for questions and answers. All of you attendees, you're on mute by default in order to cut back on the background noise. You should be able to follow along on your screen. If the audio is not sufficient through the computer, then there's an option where you can go to the audio component and click on the phone link, and you'll get a phone number, and you'll get a call-in number. You can join that way as well and still view on the screen. For questions, there is an instant message function in the question area. So just type in the question as it comes to you. I always encourage people, don't wait for the end for the Q&A part. As a question arises in your mind, you can type it in. That way, when we get to the Q&A, we're ready to go. If you feel like the question's been answered later in the session, you can always just let us know that you're satisfied the question's been answered. If we have more questions than we can get to, we will compile them and we'll share them with the speakers today and let them get back to you after the webinar. So with that, I think that Stephen, I'll turn it over to you.
Great, thanks very much, Patrick. And before we move on to the next slide, just to kind of reiterate a few things here. This webinar is primarily a launch webinar for a report that we at Forest Trends, the Supply Chain Initiative, have worked on with Lestari Capital, with support being provided by Partnerships for Forests. This is a very important report because it helps us look at different ways of slicing through the data from the companies that we're tracking, that we've been tracking for the last 6 years as an initiative. And so really happy to have Michael and everybody else on this webinar with us, and you as the attendees. The report, if it's not already, will be available very soon on supply-change.org. Also be available on our host website, forest-trends.org as well. On to the next slide, Patrick. So, you know, Forest Trends is a DC-based not-for-profit organization. I won't spend a whole lot of time talking through this, but I want to call attention to the fact that these are two initiatives, Ecosystem Marketplace and Supply Chain, that sit underneath the organization umbrella. And the work that we do is really kind of to track through research and primary data collection through surveys, key information about environmental markets and corporate actions to addressing commodity-driven deforestation. So we'll be talking about both these initiatives in some detail here today, as well as the report in more detail. So the opening here is really brief for me. I'll be coming back in a little bit later to talk about our State of Voluntary Carbon Markets report, which features nature-based solutions. So over to Philip to give us an introduction to the report and the key findings.
Next slide, please. Good morning, everyone, or good afternoon, depending on where you are. So my name is Philip Rothrock, and I lead research here at Forest Trends. And I'm a co-author of our new report. You can see titled here, Commitments in Action, Corporate Tells for Financing Forest Conservation and Restoration. I want to take this opportunity to acknowledge our team that contributed to this report and to make this webinar happen: Laura Weather, Ciro Calderon, Patrick McGuire, and Kate Ellis. Next slide, please. So to set the scene, next slide, please. To set the scene, we all know that deforestation poses a serious global threat to humanity. Photos of the Amazon fire have captured the attention of the world. Media coverage and environmental campaigns are increasingly connecting these impacts with global agricultural supply chains of many prominent companies. And as you can see here, clearly there's growing public awareness on climate change and forest-related impacts. And there's clearly a public interest that companies are going to need to respond to. Next slide. So the question is, which companies are most likely to support and partner with nonprofits and project developers on conservation restoration? Next slide. So supply chain is well positioned to answer this question because we already track around 900 companies active in commodity supply chains, most tied to tropical deforestation. These include cattle, palm oil, soy, timber, pulp and paper, and most recently cocoa. We monitor company ambition and actions to address commodity deforestation, and as you can see, we are tracking a growing number of commitments and as well as related progress. So we're a nimble team, and with the support, we can easily expand our tracking to cover additional companies, commodities, and metrics prioritized by our partners. Next slide, please. So Supply Chain and Lestari Capital teamed up to develop a new approach to understand the true extent of the issue at hand and to know where the most critical needs are. So you can see here that the key was to identify what data would indicate the greatest need for companies to make sustainability commitments and demonstrate that being fulfilled. So we established 4 key indicators of potential motivation for funding and conservation. These included potential risk, external risk, company ambition, and company actions. So supply chains tallied whether companies met the conditions for each indicator, and sub-indicator assumed those, and we assumed that those with higher aggregated tallies were more motivated to fund conservation and restorations. So looking ahead, supply chain can work with others to expand and then build on this methodology to meet additional and emerging information needs. Next slide. Next slide, please. So for this project, supply chain identified companies in the top 25% of reported revenues and commodity volumes, so such as Wilmar for palm oil, as a means of identifying potential risk. And then after that, we dug deeper to identify forest risk coming from external scorecards and assessments. So pictured here is some of the data that's based off of that. So for this assessment, supply chain and Lestari focused on scorecards from Greenpeace, World Wildlife Fund, and many others, to name a few. So supply chain finds that companies targeted by external assessments and campaigns such as CDP, WWF, and Greenpeace tend to appear more likely to have commitments relevant to the targeted commodities. So as you can see, companies based, so this graph kind of shows differences between commodities. So companies based in the US and manufacturers were the most targeted by scorecards, and so companies like Mars, for example, were targeted by many scorecards across multiple commodities. So fewer assessments covering cattle and soy supply chains highlight that there's a real opportunity for driving commitment development in this area, and then might be less current external risks. So supply chain has aggregated the scores and some of the associated data from 35 different assessments and counting. So this tracking could easily be expanded and tailored to meet different needs. Next slide, please. Apologies. So for this analysis, supply chain gauged company ambition by whether companies had at least one commitment to sustainability and zero deforestation, complete or partial commitment coverage for all 5 commodities we track, and as well as key multi-stakeholder groups. This includes those with collective commitments like the Consumer Goods Forum, New York Declaration on Forests, Tropical Forest Alliance, and others. So the figure shows here that companies exposed to 1 or 2 commodities tended to have better commitment coverage than those with more commodity exposures. So we also found that engagement in multi-stakeholder initiatives like Consumer Goods Forum can play an important role in asserting corporate ambition to address. Oh, apologies. I think we're getting feedback. Anyway, we also found that engagement in multi-stakeholder initiatives like the Consumer Goods Forum can really drive companies to, set goals and act. So additionally, 1/2 of companies with commitments have reported evidence of implementing on-the-ground actions such as satellite monitoring systems, restoration projects, and supply chain-oriented partnerships. Next slide, please. So the key implementation activities that supply chain and Lestari considered for this analysis was the use of what I mentioned before, satellite monitoring systems, restoration projects, pursuit of partnerships on supply chain sustainability, and purchasing of voluntary carbon offsets. Our findings show that commitments do matter. Companies with commitments were 2 times as likely to have demonstrated key implementation activities as those without them, as you can see in this figure. So it's important to note that still only 1/2 of the firms with commitments reported employing key implementation activities. So clearly there's insufficient progress, and so that may drive companies to be interested in funding off-site conservation and restoration activities. Next slide. So I just wanted to give you an example. So by drawing on such a large data set, supply chain and Lestari were able to kind of consider a list of companies with the highest overall tallies and for each indicator. So this approach let us compare the companies' data side by side to identify which companies have the most potential motivation to invest in conservation. So companies determined to have the most overall potential to invest were more likely to be publicly traded, vertically integrated, and were more likely to be based in the United States. So certainly this approach can be improved and refined by modifying and adding new metrics, yet we find that for a number of the companies with the highest tallies did show indications of interest in conservation and restoration funding. So for example, you can see here IKEA was among the companies with the highest number of aggregate tallies, and we find that they are very focused on restoration and conservation. And so this indicates that there's a great opportunity for expanding this data collection and can be used to further increase the accuracy of the results. Next slide, please. So finally, to conclude, our results suggest that companies part of multi-stakeholder memberships and targeted by external assessments can be especially motivating for companies to make commitments and take actions in addressing deforestation. And so supply chain can use data on all 4 of these areas to kind of identify companies that are interest to our partners. So we look forward to refining our approach and as we continue to expand and refine our data collection practices. As you will hear, there's a growing demand in the private sector for carbon offsetting with voluntary carbon markets. And similarly, there's a greater focus amongst companies to pursue insetting. These climate mitigation strategies are complementary with company efforts to address commodity-driven deforestation. And increased reporting and uptake around these strategies can also be layered with our existing supply chain data to further refine our understanding of current and future private sector demand for conservation and restoration. And with that, I'll pass it off. And yeah, we'll jump to have questions at the end.
Michael, this is over to you. Are you able to unmute yourself?
Oh, hi. Sorry, I didn't see the change of slides. So hi, my name is Michal Zrust. I'm one of the founders and the Chief Sustainability Officer for Lestari Capital. I just wanted to, say that the report that we co-developed with supply chain has been really insightful and interesting, and I would really recommend people to have a deeper delve into this than Philip was able, obviously, in the short time that we have to sort of give you more than a short flavor of. I wanted to just kind of talk a little bit about Lestari Capital and give you a little bit of an introduction about our approach. Next slide, and then I think maybe next slide after that. So really the aim of Lestari Capital is to really make long-term sustainable financing of conservation areas a part of business as usual. And sorry, the slides are not changing for me. If you can go to slide 4, maybe directly, that would be useful. The reason why Lestari Capital effectively came into existence is really through the identification of a very simple but unfortunate problem that is faced right now by conservation areas, and that is that most conservation is financed by short-term CSR or donor-based financing. That causes a huge problem for conservation projects because they are unable to think long-term. They are at the mercy of potential trends in how donor and CSR financing is put into conservation areas. And it also doesn't practically give them the vision or the ability to have the vision for long-term management of those areas. And at the same time, we're seeing, and the report really kind of confirms this as well, is that there is an ever-increasing number of companies that actually have what we would refer to as a demand for conservation. And that demand for conservation can take numerous formats, and we're seeing some of them very publicly with regards to certification standards, such as the Roundtable on Sustainable Palm Oil, having a requirement for companies to compensate. Now, the scale of that is really quite significant in terms of potential conservation finance. Companies are making their own commitments, for example, to one-to-one matching of their land footprint to conservation areas. We're also seeing other certification standards taking up the idea of compensation, and we're also seeing the no deforestation, no peat, no exploitation group of companies making really quite significant commitments to actually conserve areas of standing forest and to restore areas that might have been degraded in the past. And there is, however, an issue here, is that there is really no link between the two currently, outside of company to individual projects, effectively CSR financing still. And Lestari has really come into existence in order to facilitate the meeting of those two worlds. Next slide, please. And so, as I mentioned before, we have numerous angles through which this demand for conservation might come. And as a result of that, Lestari Capital has been developing what we're calling the Sustainable Commodities Conservation Mechanism, or the SCCM for short. And the way that we're looking at this is that we are creating effectively financial vehicles that are able to interact between the company and then the projects themselves on the ground. So at the moment, we're developing or we have developed, and we're in the process of developing two further vehicles for specific purposes. And these purposes are the first one are really proof of concept has been the Roundtable on Sustainable Palm Oil and supporting their members through the compensation process. And the reason why that is specifically interesting to us is because the conservation outcomes that are supposed to come out of that have to last for 25 years. So we have to demonstrate that the conservation outcomes as a result of the corporate financing are going to be there for 25 years and are going to be generated over 25 years. And the companies remain liable for the generation of those conservation outcomes, and it's tied to their certification. So it's quite a serious commitment for companies. And we're really replicating, amending the same thing for the purposes of the no deforestation commitments, and also for individual companies making individual corporate sustainability commitments, which require financing for conservation projects. I'll maybe, if we can go to the next slide. I see before it changes, I might actually be able to still speak a little bit about this. The real key of the Lestari Capital model is that we're trying to change the way that the conservation projects not only are being seen, but they see themselves. And the reason for that is why we have put in place a performance-based financing mechanism. And therefore, just to kind of say that the companies that are putting in the money, the projects have to deliver the conservation outcomes that are needed to fulfill the company's sustainability commitments, and they are funded on a performance basis. That's really key. Now, the company's attraction, I guess, in utilizing something like Lestari Capital's vehicles is really because our aim is to ensure that the corporate entities are able to meet their sustainability commitments, and we surround that with sort of robust safeguards. And this means legal agreements, a due diligence on the projects, financial accountability and responsibility, trustee in place, oversight by a monetary authority, independent governance, third-party verification of the conservation outcomes, and then essentially also transparency and efficiency and an ease of use. The companies don't necessarily understand or are able to have the capacity within their own teams to understand what a good conservation project looks like, what kinds of outcomes are to be delivered, and how to structure these agreements with the NGOs that are running the projects, or the entities that are running the projects. And therefore, this makes something like the Lestari Capital model very attractive to them. Next slide, please. So the way that we ensure credibility, accountability, but then also verified conservation outcomes is really exemplified by this slide here. Essentially, the company payments are made into the special purpose vehicle. The special purpose vehicle has a legal agreement with the projects, and I'll talk a little bit about the projects themselves in a bit. And effectively, we make performance-based payments, which are monitored and reported on every single year. Now, we are utilizing third-party certification standards, whether it's CCBS or VCU, Plan Vivo, or even just environmental service outcomes as defined between ourselves and the project. We are utilizing those because they add a very credible amount of independent oversight over the delivery and additionality of those conservation outcomes. And also because we have found, and I'll talk a little bit later about this, is that actually for the project to undergo that certification, they are already reaching a certain maturation point and certain quality of development and robustness of the project that really we need to see, and we need to see more of in the conservation space. I think you can skip, sorry, you can do next two slides, please. So just to talk a little bit about the project portfolio, the projects that we are supporting are related to the legal entities, legal conservation projects that are, and I'll give you the example from Indonesia. Indonesia has a relatively innovative method of conserving areas outside of officially or nationally designated protected areas. And these are designations such as Hutan Desas, which are community forest projects, Hutan Adat, which are traditional, what you could call indigenous conservation areas, and ecosystem restoration concessions, which are almost granted in the same way that you potentially have a palm oil license granted to you. The only difference is, of course, that the main purpose of that license is for conservation, and there are very strict stipulations around what you can and cannot do. Now, these projects are recognized by the government. Some of them pay taxes, and they are long in duration, between 35 to 95 years in age. And so, whilst Indonesia is a very good start, where Lestari Capital has really kind of cut its teeth, I guess, in developing our vehicles, we are also looking at Malaysia as the next step, and specifically in Sarawak. And of course, we need to do our due diligence with regards to all of the legal setups and designations in those areas to make sure that there is additionality. But we're also looking elsewhere as we expand to different commodities and different geographic regions, and different needs where companies have different needs also. Our aim is not to just put financing into conservation areas, into existing conservation areas. We really want to see conservation upscaling, growing in size, and having a much bigger impact. And so we are developing portfolios of projects that companies specifically under the NDPE commitments can participate in. And these are made up of existing and operational projects, projects that are currently still in development, and a new project pipeline. Now, this new project pipeline is really where I get excited about what we do and what we can do in partnerships with NGOs, financiers, and the companies, because here is really where we try to work with project proponents. Lestari Capital, by the way, does not manage the projects themselves. We work with third-party NGOs and other entities that have these projects, where we're able to essentially facilitate the setting up of new projects, focusing as it is right now. We're looking at, for example, retirement of forestry concessions, stranded assets, unallocated areas that are still forested, that preserve masses of biodiversity in Indonesia, but of course elsewhere. Next slide, please. So I'll just give you a little bit of a flavor of some of these projects. The first slide that you will see is actually an ecosystem restoration concession. It's well over 50,000 hectares in size, and each one of these projects, of course, does what is required in the area where they're operating in. And I think you can already press the next slide button before we get to it. These projects, we do not dictate what activities they do. We do not interfere with their management. However, they are free to effectively identify the conservation needs, which might, of course, change over 25 years, And we try to facilitate as much flexibility in terms of how the financing works, as long as the KPIs are still fulfilled. And so some of these projects might be standing forest protection, some of them might be more sort of livelihoods focused, again with a conservation component. Some of them might be species reintroduction, and so on. So lots of different varieties depending on the geographical needs of the projects. And I'll just one more slide, please, and maybe one more after that as well. Now we are also just to align with my earlier point with regards to expansion of areas. I'll just show you a quick slide of some of the analysis that we've been doing with regards to potential project areas in Indonesia, and the map that was very quick this time around, and the map effectively shows you the areas that are actually in Indonesia, in Sumatra and Kalimantan, that would be available, potentially would be available for upscaling of projects. And what's really interesting about this is that as we've been doing our work, we found a really limited supply of projects. And so this actually shows you the potential of where these projects could potentially be. And this is not even taking into account retirement of existing forestry concessions, for example, where there is really a massive potential impact that could be made. Next slide. And one thing that I will leave you with, you know, I come from the conservation space, and you know, I was very excited to start Lestari Capital and to start looking at what kinds of projects could be financed by this. And what I was really surprised about is that actually the project supply isn't that great. And this means, if we could just go back one, this means that there is a lack of legally recognized, robust conservation projects that are already operational. Sorry, if you could go to that's the one, improving project supplies. Thank you. And really, as a result of that, and as we are seeing this trend of the corporates, of the private sector, wanting to support more conservation and actually needing to support more conservation through their sustainability commitments, and this is a good problem to have, by the way, we're starting to recognize that actually there might be a project supply shortage. As a result of that, we need to really significantly scale up the number and the scale of the conservation projects that is out there. We also, in order to make these projects more attractive to corporate financing, need to start thinking about how we can standardize some of these projects. Now, as I said, of course, all of these projects have their own conservation priorities to deal with. What I mean is more to do with the way that the KPIs are set up, the way that the budget are formatted, and the way that they are professionalized in terms of their outreach also to the corporate sector. And specifically really to do with the monitoring and reporting and the certification of these projects. This is really what is going to make the demand side of this, which are the corporate entities, be comfortable that the money that they are putting into these conservation projects, sometimes for 25 years, sometimes tied to their own reputation because of their certification or sustainability standards, is really the aspect that's going to make them more comfortable about supporting that, and we really need that. And the last thing that I would do as sort of more of a call to action is really the need to start developing a professional project proponent network. And you know, having worked in conservation for quite a while, I would really prefer that we started sharing the knowledge sharing of the negatives almost more than the positives, so that we can actually learn from past mistakes and not just repeat them. Just to say also thank you to Partnerships of Forest for supporting Lestari Capital and the SCCM to date, and to keep us kind of going with regards to the vision that we have for this. And please reach out to me at any point if you have any questions. And I'll finish there. Thank you, Philip.
Thanks, Michael. This is Stephen Donofrio back on the line, just to kind of reflect on what has just been discussed and kind of show a different angle of our work at Forest Trends that really links up to this that's just been demonstrated here with this new piece of analysis. And I think it's also important to kind of acknowledge that Ecosystem Marketplace is a very strong kind of sister initiative to Supply Change. It's been around for roughly 15 years. Over that time frame, has been tracking all different types of markets for ecosystem services, and as well as tracking private finance and a number of other things. And so really Supply Change emerged from this historical work and takes a different approach of doing the desk research that Philip had mentioned. But what is so critical about all the work that we do is that we're really trying to be fact-based and built off of primary data, and that is coming either through direct engagement or through research, as I've mentioned. So the ecosystemmarketplace.com is its own standalone website. It has news and other things. But I want to acknowledge also we have a group of supporters that are really fundamental for our work and are active in markets in their own right. Next slide, please. So what I want to take a moment to talk through here, because there is a very strong link between our latest 2019 report and this sort of a need for better clarity about where the demand for investments into nature-based solutions is just to kind of recap for those who aren't aware that we've been running a survey for the last 15 years, collecting transactional information from project developers and traders and other actors related to voluntary carbon offsets. So this is the kind of nuts and bolts of what goes into the State of Voluntary Markets report. It has confidential data, which we then aggregate and anonymize, and so we protect the identity and the information that's provided to us. And so if anybody on the line is a project developer and has not received our survey, please do get in touch with us, and we'll make sure you get the 2020 survey, which is going out soon. Next slide, please. So what I wanted to call attention to, and you can actually, as I'm getting into this, go to the next slide, is that when we ran our analysis from the 2017 and 2018 calendar year data that we collected in the year 2019, we saw a huge uptick in interest from market actors and across the board, really in terms of offsets. And so just by purpose of comparison of 2018 to 2016, which was our previous report that we collected data in 2017, the total increase that we found in terms of million metric tons being transacted was roughly a 52.6% increase in activity. So a big jump, from 2016 to 2018. That also, means an increase in value of the market, so actual dollars associated with the tons of carbon. Next slide, please. And what I wanted to highlight, as a result of looking at sort of the overall numbers, is that the demand for natural climate solutions, and you can go to the next slide, is really what has kind of driven this sharp increase in the voluntary carbon markets. And as you can see here, broadly speaking, that nature-based solutions or natural climate solutions was equivalent of about 264% increase in 2018 versus the 2016 calendar year. And as you dig a little bit deeper and look into project types, when we think about REDD+ or afforestation, reforestation, you can see those numbers and very steep increases as well for both. But what is really interesting to see is the 342% increase in afforestation, reforestation. but still, we did see a sharp jump in Red Plus. And the reason why I think it's important to kind of call this out, there's twofold. The first is that in the previous year when we ran this in 2016 for 2016 calendar year data, the renewable energy was actually a larger representation than forestry and land use, and now that's switched. And so the trend is definitely towards the investments into forestry and land use type of offsets. The second is thinking about Michael's comments about available supply. And as we understand, this is a market, voluntary carbon market, that has various standards, but in some way or another, it is an enclosed market where you're creating carbon credits out of these projects. And the Lestari Capital approach is a different one, but it still is looking at potentially the same or similar source of supply of land or conservation efforts or forest restoration work. And so it's important to try to factor in the different pieces that might be working in parallel that are potentially shifting where demand is going for different types of investments. Next slide, please. So as we kind of transition away from the data, which I wanted to keep very high level and just relevant to the discussion, there's a lot more that we can get into if you do want to have a follow-up. But as we get into our 2020 cycle, as I mentioned, if you are interested in feeding into the survey design, if you're interested in receiving that survey so you can respond to it, or if you want to support us or be a part of things in any other way, here are some options that are kind of on the board. And we do have a few more spots left in our strategic supporter program, which the organizations you see there identified are those that are a part of it. And this is really, this is beyond kind of a sponsorship. This is more of a collaborative engagement that, we're finding more and more opportunities to kind of build out. So feel free to reach out to us at any time, and we'd be happy to kind of share more insights and additional data as well. So I'll hand it back over, to Patrick, who I know has been monitoring the Q&A, and to let us know where we stand on questions that have come through.
Yeah, thanks, Stephen. And thanks for the three of you for a great presentation. So we've got 10 to 15 minutes to the top of the hour. We do have a number of questions lined up here, and let me just expand this box a little bit more. All right, I'll take these mostly in chronological order. There were a few that were more general. So the question, will the PowerPoint be available after the meeting? My understanding is yes. If I guess, Michael, if you're not comfortable with that, let us know, but we intended to share this with everyone. And then there was also another question about, will we share the full report with all the attendees? Yes, we'll do that. We just needed to tweak a couple little things, and we should have that available, I think, in the next 24 hours. And we'll send out a follow-up email to everyone with links for those two pieces. All right, so the questions that came in were, as you might suspect, the earlier questions were more for Philip, and the later questions were more for Michael. So Philip, I think this one's for you. How does this align with the Accountability Frameworks Initiative?
Yeah, that's a good question. So Supply Change collects company information on a rolling basis for around 900 companies with exposure to the big four commodities. And so we collect this information and note whether it adheres to the Accountability Framework standards. Like we've done a mapping exercise to see how the metrics pair up. But for this analysis, we just looked at a few metrics, some of which are aligned and some of which are focused on other items. But we do collect that information, and it would be easy to figure out if there's specific metrics that are of interest.
Okay. Next question. I'm not reading the questioner's names because I don't have their organizational affiliation, so we'll just leave them as anonymous. The question is, the Forest 500 Annual Report 2019, launched by Global Canopy, found that of 210 companies with commitments, 48% do not report progress for implementation. This report is aligned with others that state that a company's commitments to a great extent remain inspirational and are not fully put into practice. Is this aligned with your findings?
So as I mentioned before, supply chain collects information on a rolling basis. So you can imagine it kind of like a snapshot, whereas Forest 500 collects data on an annualized basis. So it's not accurate to compare them. However, what I would say is that those findings of theirs track ours pretty well. The thing is that the number of companies with commitments that they have is a small. We collect a larger subset of companies. So I think they have, you said 200 some with commitments, whereas we have nearly 500 some companies with commitments and nearly 900 which may or may not have commitments. And so, as I mentioned before, the nature of those commitments and the progress, we collect a variety of different metrics, some of which are, more or less aligned with the accountability framework.
Okay, thanks, Philip. Next question about financing projects. I guess this is more for Michael. How do you deal with changing trends in markets with regards to financing and validation reporting? Projects cannot conform to the fast pace of changes in the markets and trends. Both trends and markets make it insecure to establish a long-term financing and a robust validation of results.
Mm-hmm. I have to admit, I haven't really found that to be the issue at the moment, because as we stand, at least the commitments that we're working with right now, or the ones that we see in front of us, are really for the 25 years, effectively linked to the hectareage. So they're not necessarily linked to a specific conservation outcome. They're more to do with general conservation outcomes linked to the size of the area and or to the amount of financing that needs to be put into conservation, and then the KPIs that are reported on really depend on the individual projects. As I mentioned, there's a huge variety of projects, all undertaking their own work depending on their own priorities. And so, for example, if we had a catastrophic fire, if it was a forest protection project, for example, on one side, and a huge fire took place, in year 5, we of course have to change with the fact that actually more of the project will then become potentially more focused on restoration or peat rewetting or whatever it may be to that particular context. We do not interfere with those kinds of priority settings, although we would have to report to the companies that are supporting that project, or to the certification standard in terms of the one that is demanding the conservation outcomes, that the situation has changed. We haven't really seen that to be a problem, whether there is a certain demand for example, we want to only support orangutan projects, although some companies may have a specific preference. With regards to the validation, we haven't seen any kind of demands and trends of changes in the trends for the different validation standards as of yet. But I'm certainly happy to talk about this more separately.
Okay, great. Thanks, Michael. Incidentally, there was a question, Michael, asking, could attendees have your full name and email address? And anyone who asks that, I'll just direct them to you individually and let you respond.
Sure, please do.
Yep. Next one also for you, Michael, has to do with the Lestari model and similarities overlap with REDD+. So it's what you're describing is very similar to existing REDD+, assuming REDD+ accounts for social impacts. How do you differentiate your projects? Why not use existing REDD+ credits for companies?
Mm-hmm. Well, I mean, when we started, certainly the first conversation that we had was really to do with carbon credit producing projects, and the sort of the lament that there was enough investment money going into potentially setting up and developing conservation projects which were focused on producing carbon credits, but that at the time there was nobody really buying those those carbon credits, and the problem was that there wasn't really the long-term demand for the conservation for the carbon credits and really the underlying conservation outcomes that were being generated. I think that is changing, and certainly, you know, the second report on the state of the carbon markets demonstrates that. We're seeing that there is much more uptake nowadays of GHG emission reduction, voluntary kind of emission reduction purchasing of credits, and we do get companies coming to us and asking whether we transact carbon credits and how those are linked to the conservation projects that we're supporting. At the moment, we are mostly focused on the conservation and also the social outcomes that are being generated by these individual projects. There might be carbon credits produced by some of these projects, but not by all of them. It's really because of the corporate commitments that we're focusing on right now are not necessarily to do with carbon credits. They're not to do with the voluntary carbon market in terms of GHG emission reductions targets or becoming net carbon neutral. Now, certainly those are being produced by some of the projects that we're supporting, but actually the commitments that we're focusing on are really to do with supporting conservation in terms of hectares, in terms of conservation and social outcomes, rather than credits themselves. But we may utilize those credits effectively as another sort of piece of demonstration that the additionality has been generated by the project.
Okay. There's a question here on the supply side, supply projects. So there's tremendous growth in supply of capital. How best to increase project supply? I'm not sure the project standardization will yield quick results. Corporates must better adapt themselves to context of diverse enterprises. Michael, maybe that's...
I think, I mean, maybe just to answer the first point. Yes, I think corporates are interested in a diverse range of conservation outcomes. They are interested in, you know, standing forests as well as restoration projects. This is really kind of company dependent and the context dependent on where the demand is effectively coming from. What I meant by standardization is really to do with the way that the projects are able to present themselves and are able to demonstrate that the conservation outcomes are being generated. What we found, and this isn't a criticism, this is a product of the way that we have unfortunately been financing conservation for decades, and that is that projects are essentially dependent on donor-based financing. They do their best, of course, under very difficult circumstances to achieve the outcomes that are being requested by the donor, and they generate reports. That is not the format in which actually the corporates who are dependent on those outcomes being generated are necessarily satisfied that those outcomes have been generated. Bear in mind that many corporates have been doing CSR for years. And really when their corporate sustainability commitments and their certification is at stake, they want something more robust. And that's really what I was implying here, is that it's that sort of change in the demand for the conservation that we should try to address, because that's what makes the conservation projects more attractive to the corporates. Now, getting there is going to be a long road, but I'm really hoping that these are, and a mechanism like Lestari, where conservation projects and conservation projects proponents can see that there is a way to access 25 years of financing will, at least even on its own, start to generate more interest in developing these projects, and not necessarily be pushed by us. We don't want to be in that role. That's not our role. But we're certainly seeing that gap, and we're hoping that this is going to give the right signals to conservation actors that they are able to set up conservation projects which are going to be financially viable.
Okay, thanks, Michael. Next question is maybe the flip side of that in terms of the corporate role, and it's a bit of a jump ball in that it could go to any of you, but maybe I'll offer this to you, Stephen, to respond. How do you respond to resistance to the commodification of nature, quote unquote, and criticism of corporate investment into conservation as greenwashing?
Yeah, this may, looking at the time, it may have to be the last question. So I'll try to be very brief, acknowledging we're trying to keep to this hour mark. You know, I think what we can say is purely just based off of what we are seeing in terms of market activity and what we're receiving in terms of you know, responses to the survey. And as we also produce the report, we do very qualitative, informal dialogues with a number of market actors that give us additional insight. And what we're kind of finding is a mixed kind of a bag of approaches, and different sectors seem to have different opinions as to, you know, what types of projects they are interested in investing in terms of carbon offsets. Some are very in tune with REDD+ and, you know, having the community and social verifications and certifications in addition to the carbon offset credit certifications and verifications. And others are staying away from land-based or forest-based types of projects. So it's sort of a various different approaches, and we don't really take a stance on what is, you know, the right type of project or the right strategy for the company. However, it's important to be able to interpret what it means for the business if they are demanding certain types of credits or investment strategies into nature. And the fact is, you know, nature is our you know, most valuable kind of asset that we have available to us, you know, now as an investment opportunity to getting to our Paris Agreement goals without having to create new technologies to get there. So I think there's a growing understanding that this is a now opportunity. But in terms of being able to opine on whether or not a company should be commoditizing it, you know, that is up to their own will. But our whole purpose of tracking these markets is to help guide market actors in terms of understanding where the trends are going and what types of interest the supply and demand side have overall. So I'll leave it there.
I would quickly jump in and just say, from a supply chain research perspective, I hear you on concerns about greenwashing and you know, commodification of nature. And as Stephen mentioned, you know, we don't kind of advocate for one approach over the other. However, we do collect sufficient information so that you can make that assessment judgment yourself. So we make note of when there are limitations on company commitments in terms of their scope, in terms of which geographies they cover, which commodities they cover, whether they specifically promise to adhere to accountability framework aligned goals and progress reporting or not. And so I think the good news is there's a wealth of data out there that, you know, that we collect and others that can help audiences determine for themselves which companies are going above and beyond. Yeah, I'll leave it there.
Great, thanks, Philip. Michael, unless there's any final thoughts, we'll wrap it up here. We're a little past the top of the hour. We will get the final presentation and the paper out to all of the registrants. And Michael, I'll share with you directly some of the people who asked for your contact information.
Great, thank you.
Okay, well, thanks to everyone for joining us today, and hope to hear from you soon. We'll be in touch. Bye now.
Thank you.
Thank you. Take care.
Thanks, Philip.
Thank you, everybody.
Thanks. Bye now.